Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model Daily Review for Wednesday the 30th of the 6th, 2021. Time has just gone 04:30 GMT, Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday, Tuesday the 29th, we had a symmetrical system here, but basically we had weakness in the pound, equally matched by strength in the yen. So you can take your pick. So you got minus 120 on the pound, minus 67 on the euro, plus 67 on the dollar, and plus 120 on the yen. So you've either got the yen positively driving or the pound negatively driving, and that's an activity of plus or minus 187. Intra-week then becoming slightly more relevant because this is from Monday the 28th. Open to about 15 minutes ago. We've got a positive opposed driver in the yen at plus 177. Front and back door flows, mainly coming out of the pound at minus 126, out of the euro at minus 79, and the dollar is the positive rock at plus 28. Activity plus or minus 205. Intraday then, this is the Asian session to about 15 minutes ago. We've got a positive opposed driver in the pound, plus 34. Front and back door flows, mainly coming out the dollar minus 31, out the yen at minus 15. And the euro is the positive rock at plus 12. Activity plus or minus 46. Right, what's going to knock it about? Well, we've had the China manufacturing and non-manufacturing PMIs. In modelling terms, they came in mildly positive. GDP today, Euro CPI, and the US ADP report, which is a pre-runner to the NFP. Right, so a little bit of data coming out, and we're busy right through now to NFP, non-farm payrolls. Right, excuse me. Right, so let's have a look at the flows. Right, our trades have improved a little bit. They're still well down, but they've improved. What are we? We're about 2,700 points up again from a peak of 6,500. So, well, about 40% from the floor, really, of the peak. So let's have a look then. Euro is strong, except against the pound, the AUD and the NZD. The yen is weak, except against the dollar and the Swiss. The pound is strong, except against the AUD and the NZD. The Swiss is weak across the board. The CAD is strong, except against the pound, the AUD and the NZD. The AUD is strong, except against the NZD, and the NZD is strong across the board. The dollar is weak, except against the Swiss. Right, so what have we got? We've got Swiss weakness, and we've got New Zealand strength, and we've got Australian dollar strength as well, minus the New Zealand. So that's where we are. Let's have a look at the asset classes. Start with the dollar index and work it through before we do the analysis. Right, so US dollar index. What have we got? We've got it's got this sort of look to it. It's 0.18 from the model high, so the dollar's still strong. It's still strong after that Fed tightening decision about 2.5 weeks ago. Excuse me, or whenever it was. Right, gold, as usual. Gold really won't like that, and it's 0.37 from the floor. Oil oil broke and it's come back and it's working. It's just below its previous high, so it's gold oil's very strong still. Right, Wall Street. Wall Street's got this sort of gradual downward look to it, but it's 0.29 from the high. S&P, well, the S&P broke and it's plus 0.23 from the modelled high, so it's broken 23% from the modelled high. And the tech has broken 0.32 from the modelled high, so the tech's the strongest in relative terms. US 10-year on the bond, we've got this sort of situation. It's 0.48 from the floor, and the bond is looks roughly like that. It's 0.42 from the high. Remember, this is the prices then, so the bund, the European bonds are in price terms relatively much higher than the US, so that means the yields are a bit lower, but the gap is starting to close again now. The US 10 years starting to pump up on price a bit. So right, copper. Right, copper, basically it's sort of about 0.4 from the high, so copper's come up, back up a bit. US steel 0.33 from the floor, so US steel is still pretty soft, and as is copper, but copper's come back a bit. And we had a rollover in the copper contracts yesterday. Right, so let's just finish off then with a bit of analysis on what we think is going to happen. Right, so as you know, we're short USD, dollar against euro, pound and AUD, and we're short NZD against euro, pound, CAD, AUD. Right, we've got GDP coming out. We've got ADP on the US dollar as a run into the NFP. The New Zealand dollar has had positive sentiment again, as has the AUD. It's a very asymmetric response on it. Everybody wants to just buy into the NZD, particularly against the AUD at the moment, but that will not carry on forever. The CAD's got the oil pump at the moment, and the yen. So the yen's got this rollover in equities at the highs. So we've got equity transmission there. Right. So that's just basic terms. Right, so what do we think is going to happen then? Right, so we've got GDP, likely to be it's likely to be neutral to reasonable, or we would suggest positive. The pound has come off in sentiment recently. It's got potential to bounce, so we think the pound could bounce. Regarding the ADP report, it's supposed to be soft, a little bit soft, but I reckon it'll be strong. So the ADP is an absolutely awful measure of that sort of employment, but it's awful in a good way, because it shakes everything up. So we're expecting an outsized ADP, a reasonable GDP on the pound, and where's all this heading? We expect equities to start rising again. The yen to come off, and we're just basically carrying on as we are. But if you're short-term trading, watch out for, like we say, a bit of a pump in the pound, and it's likely to be pound yen. So that's worth looking out for, the pound yen. on the app. So I hope that was useful. See you again for the daily briefing tomorrow. Thank you very much.